Everybody, and welcome to Module 5, Bank Reconciliations. So, this is one of my favorite things to do in the world of bookkeeping. I hope you guys enjoy it as well. It's just one of those really satisfying things for me. It's like comparing and finding out what's missing and just making everything perfect and balanced in the end. I just find it really satisfying. Like I said, one of my favorite things to do. I did the reading today, and the reading has all the little intricate details that you need to have. So please, please make sure that you do the reading this week as well. But as I was going through the reading, I thought that it was getting a little complicated in places, and for some of you, you might feel a little bit lost. So, what I'm going to try to do today is just take the information from the reading and give you just the very basics of what you have to do, the steps that you need to do to make a bank rec um, work. And then you can take what I'm showing you, add in all the extra little details, and hopefully when you do the practice exercises and the marked exercises, it'll all fall into place for you. Okay, so bank recs really are just a place to keep track of missing information. So what we do at the end of every month is the bank should send us a statement of all of the transactions that took place in our bank account. So all of the money that we deposited, all of the money that was withdrawn for whatever reasons. So it could be cash, checks, electronic transfers, fees for the bank, interest from the bank. There's a whole bunch of things that take place every month in our bank statements. And that's on the bank side of things. On our side of things in the office, we also have our cash ledger, our journal that we then post to the ledger. And so what we do at the end of the month is we take our cash ledger, so all of the information that we've been recording in our office, and we compare it to what the bank says we have. So we take our cash ledger account and compare it to the bank cash account, and we just make sure that they're even. Now, a lot of times they won't be because things happen at the bank that we're not aware of, and or maybe we've recorded something and either we have made a mistake or the bank might have made a mistake. So there's lots of little adjustments that have to be made. So, as you know, at the end of every month or at the end of every accounting period, we're going to go through and do our adjusting entries. So, we would do the bank reconciliation statement, figure out all the changes we need to make, and then we would make those changes while we're doing our adjusting entries in our journal and then posting them to our ledgers. Okay, so that's where it falls into the process of bookkeeping. So, what we're going to do is I'm going to show you this example. It's on page 3 of the book. I think it's a really good one to use. And then I'm just going to talk about the steps as I go. And we're only going to focus on this one example. So here we have, excuse me, at the top, we have our bank statement. It's from London Bank, and we work for Rickard Peanuts. And so it has our opening balance, and it shows us excuse me, all of the deposits that have gone in and all of the withdrawals that have come out. And then it gives us our closing balance at the end of the month. Below that, there's a copy of our account ledger. So we know that our account number for cash is always 1010. So again, we started with $5,000. We're showing one withdrawal and one deposit. So you can see already that up here there's three deposits and three withdrawals, and we only have one of each. So obviously, it's a very, very clear indicator that we're going to have to do some adjusting to our bank ledger account to make it match our bank statement, or our cash account matches our bank statement. Okay, so that's what this whole process is about. So in order to keep track of the changes that we're making, we're going to use a new document, and the new document is called, oh, sorry, I'm going to go ahead. The new document is called a bank reconciliation statement, or a bank rec statement. So I'm going to come back to that in a second. So I'm going to go back here. The information that I'm going to put on this bank rec statement is going to come from my checking these two documents. So what I'm going to do is I'm going to look at my bank statement. My opening balance is $5,000. My opening balance is $5,000. Beautiful. Now, Sometimes the opening balance will be the same for both accounts, especially in these practice exercises at the beginning. But in real life, that's not always the case. And the reason for that is if we are recording journal entries at the end of the month, say we record things that happened on January 31st, for example. We have them in our ledger down here, but the bank might not have had time to post them into their system yet, right? So remember, banks might close at 4 o'clock on a Friday. We might be open until 5 o'clock on a Friday. So we could have recorded things on the 31st that the bank has not yet recorded. So those are some of the things that might be outstanding amounts that we have to account for on that next document that I'm going to show you. So the first thing you do is you just start looking at the items. So on January 10th, there's a deposit for $650. So I go down to my account, my cash account ledger, and there's the deposit of $650. So I just do a check mark on each of those that shows that they're accounted for on both documents. Then I go to the next item. It's a withdrawal for $300. So again, when I look down in my ledger, I have a withdrawal for $300. So I'm going to just give a little check mark on both of those. The next item on the bank statement is a deposit for 410. I do not have that in my ledger, so I'm going to circle that so I know that I have to do an adjusting entry for that. Same with this interest charges and interest earned, and our service fees for having a bank account. So anything that I circle is things that I'm going to have to journalize and post in my adjusting entries, okay? Anything that has check marks means it's already been recorded. Good. Now, it could also happen that there'll be something down here in my ledger that's not in my bank statement. I would also circle that, and I would have to put that onto the bank rec statement as well as a change on the bank's side of things. All right, so here we go. We're going to go over to the next one. So, I'm so sorry. The bank reconciliation statement, it's a working paper, but we're going to set it up the same with the header and the 3 lines that we always use. So, name of the company, name of the document, and the date. So we're doing this as of January 31st, 2026. Now, if I go back here, um, it says, what is my balance? So this means what is the ending balance of the two statements on this page before. So if I look over here, my bank statement says I should have $5,691. So I just take that number and I write it here under the bank. And in these examples, we're going to put cash account, our cash account ledger on the left-hand side and the bank statement information on the right-hand side. So 5691 came from the bank statement. And then if I look at my ledger, my books tell me that we should have $5,350. So I'm going to write that amount under the ledger, or I could put cash account here. Whatever you like, it doesn't really matter. This is your working paper. So this is how much money we think we have in our cash account. This is how much money the bank thinks we have in our cash account. So we know that there's a discrepancy because we've circled these 4 items. So what we're going to do is we're going to go to our journal and we're going to journalize those 4 things so that at the end, the total here in our I'm so sorry, in our cash general ledger will be the same as the total in the bank statement. That's the whole goal. Okay, so before I get to journalizing, though, I want to write everything that I need to make, all the changes I need to make in this bank rec statement so that it just makes it easier for me. I can just look on this one piece of paper instead of having to look at this big long bank statement. So here it's a very short one, but in reality, a bank statement could be 4, 5, 10 pages long, and you don't want to have to be flipping through 10 pages because it might be easy to miss one of the changes that you have to make. So what we're doing as we're going through our bank statement, we're taking these items that need to be adjusted and we're writing them just on another piece of paper as a reference. That's all this is. A reference we're going to use to do our adjusting entries and to check next month that everything is all accounted for. Okay. So moving on to the next slide, you can see that I'm going to write down the four things that have to be changed. So there was an EFT or an electronic transfer, which means there was money was electronically deposited into our account. And we just didn't write that in. So maybe the money went into the bank account before the customer told us that they paid us. There's an interest charge, so that means that the bank took money out of our account. And this, we know this happens every month, but we're not 100% sure of how much the interest charge is going to be. So we usually leave this to be an adjusting entry. There's interest earned, and same thing. We know that every month we're going to earn a little bit of interest, but interest fluctuates every month, so it's best just to wait to see what the bank has given us as interest on the money we have in the account that month. And again, we know what's coming, but it's going to be added to our cash account in-house. And then there's always our service fees. And again, we know that we have the service fees coming, but we always wait till the adjusting entries to do it just in case there's any unexpected fees that we're not aware of. So a couple of these are going to be added to our bank account, and a couple of them are going to be subtracted from our bank account. So here we go. And how do we know whether we're going to add them or subtract them? Well, it's pretty easy. So what we're going to do is we're going to go back to that bank statement. And if it was a deposit on the bank statement, we're going to add it to our cash account, or it's going to be a debit. So when it's a deposit, it's a debit, we're adding it to our cash account. If it's a withdrawal on the bank statement, we're going to subtract it from our cash account, so it's going to be a credit. So a deposit on a bank statement is going to be a debit in the cash account. We're adding that money to our balance. A withdrawal on the bank statement is going to be a credit in the cash account. We're going to subtract it from our cash account. Okay, just keep remembering that. Okay, so if we go back over here, you can see that this is a deposit. We're going to add that in. The interest earned is a deposit. We're going to add that in. The interest fees and the bank account fees or the service fees are both going to be subtracted. So in the end, when we take what we had in our cash account, we add in those two deposits, we subtract those two fees. Our balance is now $5,691, which is the same as what the bank statement says, which means we have balance. We've reconciled both of our accounts. They have the same balance. So remember back when we used to do trial balances, or we still do them, but that's when we did our first reconciliation. Our debits have to equal our credits. We're doing the same idea here. We want our cash ledger to match our bank account statement. Perfect. All right. So now we're going to journalize them. And it's just the same thing like doing any of our entries. Now, I call them adjusting entries, but remember, adjustments can't affect cash. So that's why they're not included in our true adjusting entries, but they're done at the same time at the end of the month. So here we go. The first one, we received $410 cash, and we would have to look up the paperwork for this to see why we received that $410 cash. So in this case, a customer paid us, so it's going to be a credit to accounts receivable. The interest is always an expense, and our cash went down. Again, here we received $1 from interest income. So that would be listed under other income at the bottom of our financial statement. And then bank fees would be another expense, and our cash went down by $20. So When you're recording these changes, cash is going up for the deposits and cash is going down for withdrawals. And you just have to figure out what is the other account that's affected. Okay. The information should be given to you in all of the assignments. And or if you're in the office, you're going to look for the accompanying paperwork so that you know what um, what account to use for the other part of the transaction. Okay. So I've just stopped sharing here, so I'm going to resume that. I'm just going to pause this recording for 1 second and just make sure that I haven't missed any important information that I wanted to share with you. Give me 1 sec. Okay, so I've just jumped over. I just didn't want to scroll while you guys were watching. So I've jumped over to, I believe I'm on page 5 now, and I just wanted to show you um, a couple of other things. So, common items that appear on a bank statement that we might not have in our cash account, so things that we would have to journalize, are bank charges. So interest fees, service charges. Um, we also, if we gain interest we've earned on the money we have in our accounts. Another one is an NSF check. So we didn't talk about that before. So an NSF check is non-sufficient funds. So for example, if a customer pays off their account with a check for $500, when we deposit that check in the bank, it automatically shows on the bank statement that it's been deposited. But in 2 or 3 days, when the bank goes to cash that check, if the customer doesn't have enough money in the account to cover it, then the bank would have to reverse that. They'd have to take the $500 out of our account and they charge us a fee for that. So an NSF check is when we've deposited a customer's check, but the customer doesn't have enough money in their account to cover it. So the bank reverses the deposit and charges a fee for that. So NSF checks, the amount gets reversed, and there's also a service fee included. And so those two things we would have to record in our journal because we wouldn't know about that until we receive the bank statement. And then the last one, direct deposit, so EFTs, we talked about earlier in the video, and then mistakes. So we can make mistakes, but banks can make mistakes as well. So on this example that I'm going to show you now, I'm going to show you NSF checks, and I'm going to show you what happens if the bank makes a mistake, which doesn't happen very often, but can happen. So here's a good example. So now we're working with the Fanshawe Credit Union, and we have our cash account. And we're working for Giant Panda Toys this time. So here's our opening balance of $15,100, and it happens to be the same opening balance for our cash account. But the closing balance here is 14,198, and the closing balance is 14,682. So we have a discrepancy, which means we're going to have to do a bank rec statement. So let's have a look. We're going to go and check and make sure what matches and what doesn't match. So here we go. The $350 deposit, we have it over here. The $640 withdrawal, we have it over here. So those two things are the only things that match on the two statements. So now let's have a look. We have this check 325, but the bank withdrew $182. We only withdrew $128. So I'm going to circle both of these items because they don't match. And then what I would do is I would have to go back into my records, look for check 325, look at the copy of it, look at the invoice that it was for, and see who made the mistake. Did we do the transposition error? We flipped it? Or did the bank make the mistake when they were entering it? And in this case, it's the bank that made the mistake. So when we looked it all up, we were correct, but the bank made a mistake when they were typing in the amount. So we have to account for that issue. We also have a deposit that was reversed because of that NSF check. There's the fee for the NSF check, and then we have our basic service fees that we get every month. So these four items need to be included on the bank rec statement. So let's have a look at that. So here's the four things. There's the mistake on the check. There's the NSF check. There's the service fee for the NSF check. And then there's the service fee for the bank account. So looking at these are all withdrawals, but we have to be careful with this one. So remember, the check should have been for $128, but they took out $182. So I'm just going to grab my calculator to show you. Okay. I'm only sharing an individual screen, so you might not be able to see my calculator, but that's okay. So we're going to take 182 minus 128, and the difference is $54, okay? So the bank withdrew $54 more than they should have, which means they need to add $54 back in. So they have to deposit $54 to make that the right amount. So what I'm going to do on my bank reconciliation is I'm going to put $54 added on the bank side because it was a bank mistake. Okay. But I have to take away $350 for the reversal of the NSF check. I have to take away $55 for the service fee for the NSF check. And I have to take away $25 for the bank service fees. So when I take what they originally had plus the $54, it comes out to 14,252. When I take what I started with minus those three withdrawals, it comes up to 14,252. So now I have reconciled my cash ledger and my bank statement. So I have to do a journalize these three withdrawals so that my ledger will match what the bank should have. Now, I could, and I will, reach out to the bank and just say, when I was going through my bank rec, I noticed that there was a mistake on check 325. It looks like you withdrew $182 by mistake. It should have been $128, and they'll look into it and they'll make the adjustment. So there's nothing I need to do other than just phone the bank or send them an email and let them know about the discrepancy that I found. I don't have to journalize anything. I don't have to change anything, but I'm going to keep this bank reconciliation statement handy so that in February, when the statement comes, I can make sure that they've added this $54 back in. Okay, so couple of things that might happen on the bank side of things on this bank reconciliation statement. Activities that we posted late in the month that they haven't recorded yet. So, for example, if we said we deposited a check for $600, but it's not showing here, maybe we got it to the bank at 4 o'clock on the 31st. So it won't show up until the February bank statement. So I would add that here on the bank side of things. Um, and also any mistakes that happened or any checks that haven't cleared. So there's a few things that we could be adding on to the bank side, but again, anything we add on to the bank side of a bank rec, we don't have to do anything with except watch to make sure that it appears on the next month's statement. As long as it appears on the next month's statement, then we just check it off on both of the documents and we're good to go. For these other three things, we're going to continue on. We're going to record, we're going to journalize the changes. So accounts receivable is going to go back up by $350 and cash is going down by $350 because of that NSF check. Our NSF fee expense is going to go up by $55, and our cash is going to go down by $55. So that's the NSF fee, and that's an expense account. Now, we don't end up paying this because we will charge that back to the customer. So the customer will now owe us $405 because they have to pay for the NSF fee. But right now, we have to record it because it is part of our expenses for this month. And lastly, our bank fee expense account and our cash goes down. And again, we would post those all to the ledger so that at the end, our ledger would match what the bank statement is saying um, once the bank corrects that $54 mistake that they made. All right. So I think that covers off reconciliations. It really is fun. It shouldn't be too hard. It might be a little tricky just getting used to it. But as I say, make sure that you do those practice exercises. Send me an email if you're having any issues whatsoever. I hope you enjoyed as much as I do, and we'll see you next week. Bye, everybody.